Go to WSICnews.com and click on the Community Calendar button. WSIC, proud to be part of your community.
Hello and welcome to Dollars and Cents presented by North Main Financial. I'm your host, Joshua Dobi. Thank you so much for tuning in with us here on WSIC here at the 4 o'clock hour. You got 53 minutes and 30 seconds left. Don't give up on me. If you're a 9 to 5, we still got a little bit of a sprint until we get to the end of the day here, but I appreciate so much you tuning in to Dollars and Cents here presented by North Main Financial as we give attention to and perhaps even spark some conversation regarding items of financial and economic importance. Now, we're going to be talking on all kinds of things. We're going to do it again today. I'm going to name specific companies. I'm going to do that. But in doing so, remember that nothing that we're talking about here is intended as a specific recommendation for you. Meaning that even though we're going to be talking about these companies, and we may even talk about them in a favorable light or a negative light, but in doing that, again, everybody's situation is unique. We strongly, strongly recommend that you reach out to your tax advisor, to your financial advisor, or if you'd like to reach out to us at North Main Financial Group, love to hear from you. Love to chat about your particular financial situation and to see if there are ways in which we might be able to be helpful to you. Online, you can find us at northmainfinancial.com. That's north like the direction, Main like the street, financial.com. Northmainfinancial.com. We got a contact page on there. Leave us your information. Let us know the most preferred and desirable ways for us to contact you. Again, at northmainfinancial.com. But if you'd like to call into the studio here, perhaps you got something you've seen in the headlines. Been a lot of them this week. Holy smokes. There's been, well, in my world, there's always a lot of them, right? Okay, they may not be on your radar. They're definitely on my radar screen. But if you happen to see one that came across your radar screen and like to chat about it, give us a call here in the studio, 844-STUDIO-4. That's 844-788-3464. That's 844-788-3464. One more time, 844-788-3464 here in the studio. Can't promise we're going to get it on in today's show because we got a full deck here with what we're going to be covering here in Dollars and Cents here today. But if I don't, I promise I'll get it. I promise I'll come back to it on a future show and make sure that we touch base on it because we want to make sure that what we're talking about here on Dollars and Cents is relevant to you. So feel free to give us a call in the studio if you'd like to get into it. All right, what's hot? Right? I mean, that's how we kick it off, and that's kind of fun. I mean, Producer Bill, one of the things we could talk about now, and the things that are not as hot are our beloved Carolina Panthers.
Ooh.
Okay. Now it's I think we're beyond the space now. You know us here on Dollars and Cents. We talk food and football as well. I mean, we tie it into the economics of things here, but it's food.
Data points.
I mean, data points. And you got to make the largest number of data points give us the most possibility for making a well-informed decision. Right? It can also confuse you, but it could also make a well-informed decision on that end of things. Carolina Panthers. I mean, we knew the GM was going to go, right? I mean, that wasn't a surprise this week,
yes.
Right? Okay. So the general manager got let go this week. Of course, we have an interim head coach because we let go of Frank Reich midseason, and and the owner might be cleaning dishes in the kitchen of the NFL headquarters to pay off his fine. He's not doing that. He doesn't have to clean dishes,
right?
To pay $300,000 fine.
Right.
So, but
clean slate.
I mean, that's how we have to look at
clean
it, right?
slate.
And we have opportunities here.
Right, that's it.
We don't have a first-round draft pick, but we have opportunities
right,
here. Okay.
Right.
All right, that's how
that's
we're going to look at it. We're going to bring that up more, of course, because for those of you who are not Carolina Panthers fans, shout out to my Pittsburgh Steeler listeners and folks there in the Pittsburgh area. The Steelers got in. They had to have a little bit of a weave in order for them to be able to get into the playoffs there. TJ Watt looks like he tweaked his knee. That's going to hurt a little bit. Literally and figuratively, but they got into the playoffs, and that's good for them. Bill, you're a Ravens guy,
yes,
and I think the Ravens played the Steelers last week.
They did,
and I'm pretty sure that the Ravens probably even brought a couple of folks out of the stands. They were
right. That's what it looked like.
They were not going to hurt anybody going in.
It was a very tense time because my girlfriend, she's a huge Ravens fan, and You know the rivalry, I'm sure.
I do.
She's pretty diehard, so yeah.
So okay, so they knew they were in.
Yes.
They knew they had the seed, and
Yes.
So they're in there. It's going to be fun. So stay tuned for NFL playoffs if you're inclined to football, and you better be if you're listening to Dollars and Cents, because we talk enough about it here. All right, what's hot? Let's get into it. A lot of things happening this past week. I felt like as I was going through the lineup here, I was being a little bit negative. I hope that's not the case. I actually went back and forced myself to look at some things in a little bit more of a positive light. But we had some things that kind of came through the machine here. When I talk about the machine, I mean the economic and financial machine here in the U.S. that just seemed to be negative. And I'll start with one of them, not because I want to start negative, but because I like to be able to go to a positive after that. Let's talk Boeing. Boeing, the large aircraft manufacturer, challenging couple of weeks. Boy, I mean, and Boeing is a publicly traded company. It's not a recommendation to buy, sell, or hold Boeing in any way, but very challenging. I'm sure you've heard the news with regards to the Alaska Airlines flight, which had a door literally come off of the fuselage there mid-flight, and they needed to make an emergency landing. They did. There were no serious injuries as a result of that, and now there are a collection of investigations going on. Approximately 200. My number says about 230, 240 of these Boeing 737 MAX -9s that are in service right now. 170 of them are on the ground. So if you're one who flies a lot like I do, if you fly a 737 MAX with some regularity, you better check your airline. Make sure Southwest and United are the two large carriers who have the most 737 MAX 9s in service, and so those are going to be the ones that are most affected. Make sure you're taking a look at that. But really why I'm looking at that is because obviously Boeing, publicly traded company, very large aircraft manufacturer, one of the two largest on the planet, the other one being Airbus, international company. But when you're looking at what that means then as far as Boeing is concerned, still unknown at this point, because are they going to need to address all 230, 40-ish 737 MAXs in the air? Maybe. Don't know that yet. What does that mean in terms of the parts and supplier vendors which are closely connected to Boeing? Don't know yet. And what is liability? Because there's going to be probably the FAA is involved now, which they should be, of course, and that's my opinion. Certainly, you can disagree with that, but the FAA is involved right now because there is a very specific process through which Boeing needs to go in order to be able to start the manufacturing process for these planes. It is a very heavily regulated industry, and so with the FAA involved right now, there's probably going to be a fine of some kind. So what is that going to mean in terms of profitability for Boeing and for their supplier vendor chain? We don't know at this point, but it's important that you're aware of that. So I say what's hot, not because I'm relishing or I'm enjoying the fact that Boeing's going through a challenging time, but rather so that you know and make sure that that's on your radar screen. And again, not a recommendation to buy, sell, or hold Boeing stock, but really so that you know that it's out there. It's certainly hitting the headlines in my end of the universe. All right, pivot a little bit. Real estate, and we've talked a little bit about this. We're going to be talking a lot about this in the second quarter of today's show as well. But a lot about real estate here in the last couple of weeks coming across my radar screen. And I'm looking at office occupancy. So I'm looking at Class A office space. It's certainly in the concentration in our urban areas. I'm also looking at apartments and apartment rentals and the strength of pricing there. Very interesting to see. Very interesting to see, because we're starting to see, let's call it a crest. We're starting to see the kinds of things that would indicate that perhaps the super intensity as far as pricing strength is concerned is starting to cool off a little bit. We're going to be talking about that in the second quarter of today's show, but I wanted to tease that up and make sure that you hang around here with us. Appreciate so much you hanging with us here on Dollars and Cents, presented by North Main Financial, here on WSIC News Talk Now.
Keep it right here. Dollars and Cents with certified financial planner Joshua Dobi will return shortly on 105.9, 100.7 WSIC.
Well, another nice day on the way across the Lake Norman area. Sunshine is back, so another day to dry things out after a lot of rain on Tuesday. Temperatures getting a little warmer, too, as we climb into the mid-50s, and wind, not so much of a problem this afternoon either. We'll stay clear tonight as temperatures drop back down to around freezing. We'll start our Friday morning with sunshine, but as we head throughout the day, clouds will increase and You have to keep an eye out for a few showers and rain chance, possibly even a rumble of thunder as we head into our Friday evening. That's your forecast from the WSIC Weather Center. I'm meteorologist Chase Myers.
Here is your WSIC community calendar. Rocky Lynn is playing at Kane Center for the Arts Saturday, January 20th. Having performed all over the world, written hit songs, and mentored artists, Rocky Lynn is making another stop here at home. Rocky Lynn, Saturday, January 20th, kanearts.org. That's CAIN arts.org. Quilters and Knitters Unite! The Quilting and Needle Art Extravaganza is happening this month at the Statesville Civic Center, Friday, January 26th and 27th. Admission is $5. Come explore the many beautiful fabrics, styles, and maybe even buy a new sewing machine. The Quilting and Needle Art Extravaganza at Statesville Civic Center on January 26th and 27th. Birkdale on Ice is still going on through January 28th. Time to lace up your skates and hit the ice. To make sure you can skate when you want, we recommend you making a reservation. For skate session info, including times and pricing, visit birkdalevillage.com. Mooresville Parks and Recreation presents the Hitmen of Country, playing at the Charles Mack Citizen Center Friday, January 19th. Love country music? The Hitmen of Country have toured and recorded with some of the country's greatest artists, like Keith Urban, Trace Adkins, Travis Tritt, and Jason Aldean. For more information, go to visitmooresville.com. That's visitmooresville.com. Have an event you'd like to tell people about? Yard sales, estate sales, and everything in between? Visit WSICnews.com and click on events to submit your event today.
Have you made your resolutions for 2024? Do those resolutions include feeling better? Make 2024 the year that you focus on you. Stretchville and Mooresville and Cornelius can help you regain mobility and flexibility so you can live your best life now. Visit us online at stretchzone.com to get started today on a new, improved you. Stretch Zone with 2 convenient locations, Mooresville and Cornelius.
Now more of Dollars and Cents with certified financial planner Joshua Dobi on 105.9 100.7 WSIC.
Hello and welcome back to Dollars and Cents presented by North Main Financial. I'm your host, Joshua Dobi. Thank you so much for hanging with us into the second quarter of Football Reference there, today's show. And I think we have to talk about it. You may get this every quarter, at least for today, because we got a lot of news in the football arena here. I have to say these kinds of things because, what does this have to do with economics and finances? When you look at Division I, big-time Division I football, and you certainly look at the NFL, we're talking about billions with a B dollars associated with these kinds of things. I have no problem at all talking about it. Plus, I like football. So when we're looking at these kinds of things and we look at just the announcements which were made here over the last 24 to 48 hours relative to the time of this live broadcast or the recording of this podcast, if you happen to be listening to it, two legends of the game, right, Producer Bill? Two legends of the game, one at the college level, Nick Saban, retiring, or I don't know if we can say retiring anymore. There are always opportunities for these guys sitting out there.
Sure.
So when we're looking at that, Nick Saban, let's say, voluntarily stepping down from Alabama.
Correct. I like the way you put that.
All right. And I have to say the same thing about Bill Belichick. Bill Belichick at the NFL level with the Patriots after 20-plus years, 6 Super Bowls. Gosh, a lot of success there. And again, I have to say stepping away or voluntarily stepping down from the position because I can't imagine the intensity of whether you're talking about big-time college, professional, somebody, they're paying whatever they want.
I know a place.
Now, wait a minute. Are you making a suggestion or recommendation to the owner, David Tepper, about where we may want to take a look at our coaches pool for these options? You're saying
More at the conversation.
You're saying we have an opening
right.
for consideration. I wouldn't be completely objectionable to either one of those.
Right.
It would certainly put a spark into the system. That's for sure. Either one.
More hope. That's all I need right now.
That's all we need. Glass glass is always half full. You know, that's that. If you're a fan, that's just the way it is. You're always looking for reasons for it to be half full. So here's a shout out. If they happen to be listening, you might be listening to Dollars and Cents here. Nick Saban, if you're interested, go ahead and give us a call here at the studio, 844-STUDIO-4. I promise that I will provide the phone number for the general line into the Carolina Panthers.
Absolutely.
I didn't want to give the impression that somehow I have David Tepper's cell phone number. I don't. But if you would like the general access line, I could definitely give that to you. The same one that you could find on the internet with a Google search. Same for you, Bill Belichick. If you're interested in listening to Dollars and Cents here, again, you might be. And if you're interested in the position, again, I can give you the general. It's probably an 800 number, right?
Right.
Even though there's really not toll-free numbers, it's probably an 800 number of some kind. Or
That's it.
anyhow, the main switchboard, which again you could find on a Google search, but if you need it, give us a call here in the studio, 844-788-3464. All right, we're still on what's we were talking about just before we went into break there in the first segment. We were talking about some of the office vacancy data which we are beginning to receive. Also seeing it in terms of the intensity, and I have to call it intensity because for a while there, whether you're talking about Class A office space or and perhaps even more so with residential apartments, the price intensity that was in play. Meaning that if you are one who rents and you have looked at apartment rents, or if you are one who leases an office space, pretty amazing stuff in terms of price intensity here over the last several years. Again, certainly on the residential apartment side of things, it seems like from what we're seeing, data point wise, that things are beginning to crest a little bit. Let me throw out a data point to you there. I'm going to use Class A office space. This was in the Wall Street Journal. So if you're looking for it online, you can probably find it through the Wall Street Journal site. That these data points that I'm going to reference here next, looking at 40-year highs in terms of office vacancy. Now, again, 40-year highs in terms of office vacancy. Don't get too carried away with that. And when I say that, it's not because it's not a real number, but because it just creeped up a little bit from where it was. So it was about 18.9, and I think it went up to 19.6. So just about 20% in terms of movement, but a 40-year high nonetheless in terms of the amount of office vacancy. Now, we can plug and play a lot of reasons why. Some of it is speculation, some of it may be born in some other data points, but it is true that we are at a relative high point in terms of Class A office space vacancy around the country. Now, you may live in a space, and I'm gonna say Charlotte first because obviously the proximity to where we are, not a whole lot of vacancy, or at least is not at that concentration. At least those aren't the data points that I've seen relative to the Charlotte region. But when you take in the entire country, obviously there are other parts of the country which are seeing that. New York actually is relatively weak right now in terms of office space leasing and office space pricing intensity. And kind of interesting to see, because usually that's one of the ones that's right there at the top of the list in terms of desirability and pricing. And again, we're not talking about a crash out scenario. We're not talking about the kinds of things that would give us concern about where real estate is, but it is a data point, and maybe even a collection of data points when we're trying to understand, how folks are looking at the office space, the professional space overall with their employee base. Now, you don't need me to tell you that things have changed radically here over the last several years, going into the pandemic, coming out of the pandemic, in terms of how folks think about their professional engagement in terms of physical presence, meaning that for so many jobs, you had to be in the office, whether it was a cubicle, whether it was in the plant, in the warehouse, whatever it may have been, that there was a demand, not only demand, there was an expectation, there were no negotiations. There was, relatively speaking, you had to be there. Now, maybe in some more service-oriented, some more IT-oriented, information technology kinds of things, you were able to work from home or do so on a hybrid basis. That was in place pre-pandemic, no doubt about that. However, when we're looking at it in terms of the pervasiveness of it now, and very interestingly enough, the expectation by a segment of the employee base that be a part of their options to consider. There was another article in the Wall Street Journal here within the last couple of weeks that was talking about that in terms of what employees expect from the employers. And you couple that with what still at this point is a very tight labor market, meaning sub 4% unemployment right now. And you have employers who, we've talked about this here on Dollars and Cents, we've seen employers who are needing to accommodate that in some instances to be able to attract top talent. And that's been a very interesting dynamic in my end of the world to see. Not unexpected, but still very interesting dynamic, because now we couple that collection of data points with what we're seeing in terms of office vacancy. What does that mean? Well, I'll say this very quickly, and this is just a sidebar, completely subjective. It's just my own opinion on things. I'm glad, not that I would anyhow, but I'm glad that I don't own some big office tower right now where I'm trying to lease it out, especially if I'm in an urban area which has less desirability than some of these other ones. Because those notes are still due. If there's a mortgage on it, almost all of them do. Where there's a mortgage on it of some kind, and those payments are still due. That doesn't go away just because you're not able to lease it out in the same ways that you were able to do previously. So that's very important to keep in mind. We're going to be watching that closely. As I said, also, we're starting to see some let's call it shifting in the residential end of things on apartment leasing. I can't say it's pulling back yet. I really can't. Certainly not in Charlotte, doesn't seem like. And we're building pretty much nonstop in Charlotte when it comes to apartment-style living in the Charlotte region. I don't see it cooling off yet. Maybe it's plateauing. Maybe we're starting to get a little bit of a crest. I don't know. But nonetheless, we are seeing around the country, perhaps in places that don't have the same kind of price intensity, that we're starting to see that plateau a little bit. So we're going to watch that. What does that mean for the consumer? What does that mean for our economy? I mean, there are all kinds of data points that you can spin from that. We're going to get more as we make our way through the year. And because when you couple that also with what the expectation is of the Federal Reserve, and that's going to be something we're going to talk about a little bit later on here in Dollars and Cents, talking about what the Federal Reserve may or may not be doing. Lots of guessing right now. And I got to call it guessing. Gosh, every time I turn around, there's some expert on television or radio. Oh, maybe I'm one of them, speculating on what the Federal Reserve is going to be doing with regards to interest rates. There are a lot of guessing right now because nobody knows. And even the Federal Reserve Board of Governors doesn't know until they actually get to the space of decision making, because data points are changing all the time. There was a lot of speculation going into the end of last year that the Federal Reserve is going to start cutting rates here in the first and second quarter of this year. And you heard me say here on Dollars and Cents, not to say I told you so. It was overdone. And I know there is a strong desire, especially by the equity markets, that interest rates begin to be cut very quickly. I get it. Right, lowering the cost of capital, more spending, both on a consumer and on and a producer level of things. I get it. For that, it just doesn't make any sense. We got to get 6 to 9 months into this just to figure out what all these rate hikes mean in order for us to make good and cogent decisions economically. We got a 28, 9, we're bumping into 30 actually, $30 trillion economy. So when we're looking at it and the production intensity that we have here in the U.S., there's no way that we could figure that out in 30 to 90 days. It's just not going to happen. Just too many data points, too much data to consume to really understand what that's going to mean. So we're going to be watching that, especially as we get into the later part of the year. You're probably thinking, well, what do you think in terms of when they're going to start cutting rates? Again, nobody knows, but definitely not in the first couple of quarters of this year. Third quarter of this year, maybe. Fourth quarter of this year, maybe. Again, a lot of economic data points are going to have to line up in order for that to be the case. So it's not just an automatic. We're not just going to get to those particular points in the calendar, and that's automatically going to happen. The Federal Reserve is going to have to look at data-wise. They're going to have a reason to cut. And that's not my commentary on anything or whether I think they should cut or not cut or whether rates are too high or too low, or that's not my commentary at all. They need to allow for a certain amount of experience into the system to be able to make those kinds of decisions. Well, friends, I appreciate so much hanging with us here in the first half of today's Dollars and Cents presented by North Main Financial. We're coming back soon. Stay with us.
We'll have more of Dollars and Cents with certified financial planner Joshua Dobi following these brief messages on 105.9 100.7 WSIC.
Well, another nice day on the way across the Lake Norman area. Sunshine is back, so another day to dry things out after a lot of rain on Tuesday. Temperatures getting a little warmer, too, as we climb into the mid-50s, and wind, not so much of a problem this afternoon either. We'll stay clear tonight as temperatures drop back down to around freezing. We'll start our Friday morning with sunshine, but as we head throughout the day, clouds will increase, and you have to keep an eye out for a few showers and rain chance, possibly even a rumble of thunder as we head into our Friday evening. That's your forecast from the WSIC Weather Center. I'm meteorologist Chase Myers.
I love your new outfit.
I got it at Diamond Mine Apparel and Accessories. They have a wonderful selection of ladies and men's apparel.
Where are they located?
920 Davie Avenue. Their hours are Wednesday through Saturday, 10 to 6. Diamond Mine Apparel and Accessories.
Did you know that feeling sluggish or weighed down could be a sign that your digestive system isn't working at its best? Taking Metamucil every day can help. Metamucil fiber powders help promote your daily digestive health using a plant-based fiber called psyllium. The gelling action of this special fiber traps and removes waste so you can feel lighter and more energetic. Metamucil, promoting digestive health for a better you. Learn more at metamucil.com. These statements have not been evaluated by the Food and Drug Administration. These products are not intended to diagnose, treat, cure, or prevent any disease.
Why choose a Sleep Number smart bed? Because no two people sleep the same. Only the Sleep Number smart bed lets you each choose your individual firmness and comfort, your Sleep Number setting. The Climate 360 smart bed is so smart it actively cools or warms up to 13 degrees on either side for your ideal sleep temperature. The Queen Sleep Number C2 smart bed is now only $9.90. Plus, free home delivery when you add any base. Ends Monday. Prices higher in Alaska and Hawaii. To find a store near you, visit sleepnumber.com.
Dollars and Cents continues now. Here's your host, certified financial planner Joshua Dobi on 105.9 100.7 WSIC.
Hello and welcome back to Dollars and Cents presented by North Main Financial. I'm your host, Joshua Dobi. Thank you so much for hanging with us into the second half, football reference. I feel like we've been talking football every segment. I might do that. I mean, even once we get beyond the Super Bowl, then it's the draft, and a couple of months later, then it's going to be it's training camp. I mean, producer Bill, I'm going to make a reason to stretch it out just continuously, pretty much through every week until we get into the next season, because we got to look forward. Especially if you're
fine by me.
Especially if you're a Carolina Panthers fan, got to look forward. Not going to look back. Looking forward to the opportunities that we have in front of us. You want to talk about the NFL, big time college football, or certainly anything that has to do with economics and financial things? Call into the studio here, 844-788-3464. That's 844-788-3464 here in the studio. Now, I feel like in the first half, I was talking on, maybe not all negative things, but I mean, some things that maybe didn't bring a particular smile to your face, and I understand that. Sometimes when we're looking at economic data points, they're either A, not making you feel all that great, or B, putting you to sleep. I get that. So we're going to pivot a little bit here. We talk food as well. It's football and food, in addition to, and we tie it in economically to things. Some of the companies I'm going to be talking about here are publicly traded companies. Again, just because I'm going to mention them here coming next is not because it's a recommendation to buy, sell, or hold any of them. But we're going to be talking, I feel like we're using F words here, almost an alliteration of what we're talking about. We're talking French fries. Now, producer Bill, are you a French fries fan? I'm just going to keep using F. I probably shouldn't say that on the air. Words that begin with the letter F. Are you a French fries fan?
Yes, I just punished some fries, actually, shortly before you got here.
Now, are you a crinkle fry person? Are you a skinny fry person? A steak fry? I mean, I'm acting like I'm an expert. I'm not.
I am. I like them all.
See, I do too.
I like them all.
And are you a dip it in a sauce like a ketchup or ranch dressing or something, or do you just like them as the
hot sauce?
See, I'm a hot sauce guy too. See
yeah,
that?
Go with the hot sauce.
See, and that's why we get along so well. See,
Indeed.
Because I do. I love the hot sauce kind of stuff. And so what we're bringing up here, we're going to be talking about French fries here, and you're like, what does this have to do with finances? Well, it begins with the letter F, and more importantly, all right, some of these companies are publicly traded. So anyhow, there's a website out there, delish.com. No, I don't have any idea who they are, and I don't have any idea how they took this poll in terms of determining the best fast food French fries. Again, we're just going to keep going with letters that start with the letter, or words that start with the letter F. Best fast food French fries. You may agree or disagree. And again, I don't have any idea about the structural integrity of the poll which was taken here, but since we love to eat here on Dollars and Cents, we're going to talk about it. So again, it looks like 12 of them. I'm not going to go through all 12 of them here, but producer Bill, if you were going to choose fast food French fries, if you were forced to make a decision about where you're going to go, do you have a go-to? I mean, I know you guys kind of like Wendy's here at WSIC. So I mean, is that where you go?
Yeah, I
Okay.
do love the Wendy's fries,
Okay.
especially now that I dip in Frosty.
Oh, yeah, see that? So you're going a different direction.
I go a different direction there.
Not
Yes.
going hot sauce. You're actually going sweet, so salty sweet kind of thing.
Exactly, and that is a great compliment.
Interesting. See,
Yes.
I like that a lot as well. Number 6 on this list, Wendy's fries, according to this scientific or non-scientific poll. I have no idea.
I'm excited to see where this goes.
It's I mean there are lots of possibilities here. So Wendy's definitely on the list, and they call them skin-on fries. So I'm assuming there's not a peeling process on the potato. This is actually just where we cut the potato as it is.
I like it.
I mean, it's very interesting.
I'm here for it.
I'm here for it as well. I think this is lovely. And look at this. All right. So, I mean, any others beyond Wendy's? I mean, are there any other go-tos that you have? Either maybe some known or unknown.
Yeah, I think I just swam through some Chick-fil-A fries pretty quickly there.
Interesting.
And McDonald's, the arches, they get me, especially when they're on point. Yeah, they're really something.
You're just nailing this list. I mean, you really are. But
I don't know if I'm scared about that.
Well, I mean, it says, at least according to these folks, that you have good taste. Chick-fil-A number 4. And they do segment out Chick-fil-A because they have waffle fries.
Correct.
Right. So not everybody has the waffle fry, and even interesting commentary on here. Waffle fries may be a polarizing cut.
I think that is polarized.
I mean, you got to be pretty intense on French fries if you're talking about being
like
polarized
the words,
by the cut of the potato. But it says here we can all admit that Chick-fil-A does them very well. So very interesting. So number 4, and then you went to arguably one of the most well known out there in terms of McDonald's, and number 2. According to this list, and a very interesting commentary. We would be delusional. I'm not sure what that means. I don't know who we are, but we would be delusional if we didn't place McDonald's near the top of the list. So obviously some affinity for McDonald's and their French fries. They're still sad that they swapped out the beef tallow. Boy, that's a throwback.
Wow.
That they swapped out the beef tallow for vegetable oil, but at least carnivores and vegans alike can now enjoy them. Very interesting.
This is a Pulitzer article you got here.
It's intense. We take food very seriously around here. You know that. I mean, there's serious business on there. Very interesting in terms of who the number 1 was. And like I said, I'm not going to go through all 12 here, but very interesting in terms of number 1. And I have had these before, and I think they're quite good. Now I like a seasoned French fry, so I do like when there is some kind of dry rub seasoning style on there, and these certainly have that. Checkers or Rallies? So
okay,
Checkers and Rallies.
I have not been to a Checkers in quite some time.
Yeah, and I don't know how many of them are around here where we are at the studio here in Studio A, but they actually say we have a dark horse winning first place. So Checkers or Rallies, depending upon where you live. The fries at this chain are beer battered, love that, beer battered and seasoned in a savory, salty spice blend. I mean, I don't know. After beer battering and savory, salty spice blend, I don't know where you go after.
I mean, the alliterations continue.
It's just nonstop. It went from F to S, in terms of our word starts. So they're crispy, flavorful, satisfying. There's a reason they bag their fries and sell them in the supermarket freezer aisle because they're just that good. So again, very important kind of information here when we're talking here on Dollars and Cents. Because yes, we're talking about things financial, but we also talk about food and maybe a little football as well. So, all right, let's keep moving here. So we're talking. Let's pivot to the kinds of things that we need to know, and we call this segment "What to Know." And I'm bringing this next segment. I mean, we may spill this over into the fourth quarter. I promise we're going to talk about the markets and hang with me here. We'll talk about the markets, but I also want to talk about this because we have seen this adjust. We've had a lot of conversations about this with clients here over the last 3 to 6 months or so. And I'm going to bring up this idea about what to know with regards to homeowners and auto insurance. Now, whether you rent, whether you own, meaning in terms of an apartment or a house. So you may have a renter's policy, or a tenant policy, or you may have a homeowner's policy. Certainly, if you have a vehicle of any kind, you have an auto policy either on your car or on your truck that provides insurance coverage for those entities. So if you rent, you're covering your contents inside of your rental. If you own, not only are you covering your contents, and you covering your home, your domicile, whether that's a condo, a townhome, a single family dwelling, and then with regards to auto and truck insurance, covering your vehicle not only in terms of damage but also in terms of liability. And you also probably have liability coverage on your tenant policy and on your homeowner's policy. I'm bringing this up, A, because it's important that you understand what that means to have it. You probably already are familiar with those kinds of policies, but B, because we've seen it a lot here. It's all around the country. Now it's concentrated in certain states, what I'm going to say next, but we have seen a lot of premium increases here over the last several months. And I'm saying that not to alarm you or not to raise concern, but to say that we're seeing this across the country. And it's especially concentrated in two primary areas. One, our large urban centers, so the New Yorks, the Chicagos, the Miamis, the Los Angeles of the world. We're seeing heavy concentration in terms of rate increases there. And then also those cities which are located on the coast. So whether we're talking about the Atlantic coast, talk about the Pacific coast, if we're talking about the Gulf Coast there in Florida, Alabama, Mississippi, whether we're talking about those kinds, we're seeing a lot of intensity in terms of premium increases. And when I say intensity, I mean, we're talking upwards of 15, 20, 25% year over year increases. That's important. That's important to keep in mind because it impacts your budget. I mean, if you're looking at your home or you're looking at if you're renting, you need to cover that stuff from an insurance standpoint because you have to think about it this way. What if I lost it all? Whether you're renting the space, you're talking about your contents, whether you own the space, and you're talking about your contents and the structure itself. If I lost it all, you would want, I believe, to have some level of insurance coverage to be able to cover off on part or all of that loss. And that's why this is so important. So this touches on just about everybody. Certainly with regards to vehicles, whether you talk about auto insurance, truck insurance, if you're a small business owner, covering your vehicles for your small business, if you have vehicles associated with your business. I mean, it's a huge item to keep in mind. And so we recommend, we deal with it at North Main Financial Group. You may have an agent as well who deals with it, but very, very important that you take a look at it. And I know it's not racy or exciting. I get it. It's not the kind of thing that's, is the cool thing to talk about at the cocktail party. I get that as well. However, it's very, very important, especially when you have a large increase, that you understand A, why it has happened, and then B, is it something that is worthy of considering other options? And I'm not encouraging you to change carriers by any stretch, not at all with what I'm saying here, but just be aware of what the other options are out there for you to consider. You especially want to be mindful because there's a lot of this out there. We see this a lot. That just because it's a lower premium doesn't mean it's a better policy for you. I'm going to say that again. Just because it's a lower premium doesn't mean it's a better policy for you. As it may be a lower premium, it's because possibly that there is a reduction in the amount of coverage that particular policy is giving you. So you want to make sure, you want to be very careful about that because you hear it all the time, right? If you watch television for about 10 minutes, there's probably going to be a commercial on there with somebody talking about homeowners or auto or truck. So I'll say, save you, 10 minutes saves you 10% or 20 minutes save you 20. I'm not saying those are right or wrong, good or bad in any way. What I am saying is make sure you understand what it covers. So important. We have this conversation a lot with folks, and I talk to other folks who are in the property and casualty insurance business, and I talk about that. Most folks don't understand what their policies cover until it's too late, meaning that when they have a claim and when they actually go to make a claim on the policy, then they begin to understand what it covers, and in some instances, it doesn't cover what they thought that it did. And that's very, very important. So the time to consider it is before those kinds of things happen. Too late after it already happened. You can't change midstream if you're trying to make a claim, but you can do that before a claim experience. So make sure you understand what your car insurance covers, what your truck insurance covers, if you have a small business, what it covers there, what it doesn't cover. It has a list of exclusions as well. So you want to make sure that you understand what that is, and then to provide, or to seek rather, that balance between the premium that you're paying and the coverage that it offers. Very, very important. It's something we do at North Main Financial Group all the time as part of our review process, taking a look at it, making sure that folks understand what they own. All right, folks. Well, we're going to rapidly speed into the fourth quarter here. Appreciate you hanging with us here on Dollars and Cents presented by North Main Financial.
Dollars and Cents with your host, certified financial planner Joshua Dobi, continues straight ahead on 105.9, 100.7 WSIC.
Well, another nice day on the way across the Lake Norman area. Sunshine is back, so another day to dry things out after a lot of rain on Tuesday. Temperatures getting a little warmer, too, as we climb into the mid-50s, and wind, not so much of a problem this afternoon either. We'll stay clear tonight as temperatures drop back down to around freezing. We'll start our Friday morning with sunshine, but as we head throughout the day, clouds will increase, and you have to keep an eye out for a few showers and a rain chance, possibly even a rumble of thunder as we head into our Friday evening. That's your forecast from the WSIC Weather Center. I'm meteorologist Chase Myers.
Here is your WSIC community calendar. Rocky Lynn is playing at Kane Center for the Arts Saturday, January 20th. Having performed all over the world, written hit songs, and mentored artists, Rocky Lynn is making another stop here at home. Rocky Lynn, Saturday, January 20th, kanearts.org. That's CAIN arts.org. Quilters and knitters unite! The Quilting and Needle Art Extravaganza is happening this month at the Statesville Civic Center, Friday, January 26th and 27th. Admission is $5. Come explore the many beautiful fabrics, styles, and maybe even buy a new sewing machine. The Quilting and Needle Art Extravaganza at Statesville Civic Center on January 26th and 27th. Birkdale on Ice is still going on through January 28th. Time to lace up your skates and hit the ice. To make sure you can skate when you want, we recommend you making a reservation. For skate session info, including times and pricing, visit birkdalevillage.com. Mooresville Parks and Recreation presents the Hitmen of Country, playing at the Charles Mack Citizen Center Friday, January 19th. Love country music? The Hitmen of Country have toured and recorded with some of the country's greatest artists, like Keith Urban, Trace Adkins, Travis Tritt, and Jason Aldean. For more information, go to visitmooresville.com. That's visitmooresville.com. Have an event you'd like to tell people about? Yard sales, estate sales, and everything in between? Visit WSICnews.com and click on events to submit your event today.
We're back now with more of Dollars and Cents with your host, certified financial planner Joshua Dobi on 105.9, 100.7 WSIC.
Hello and welcome back to Dollars and Cents presented by North Main Financial. I'm your host, Joshua Dobi. Thank you so much for hanging with us. Fourth quarter of today's show. Flying by here. I mean, we're talking about really serious stuff. I mean, we're talking about the Federal Reserve. We're talking about those things that have to do with real estate. And we're also talking football and French fries, which during the break, producer Bill brought to my attention that I didn't mention one that I probably should. And you may or may not be in agreement on this, and that's okay. I won't think any differently of you. But Five Guys. Five Guys French fries. Now, and I know this has nothing to do with the segment, but in addition to the French fries, I mean, I love those hamburgers, and I've had hot dogs too. I mean, there's just nothing there that I don't like.
Starts with an F too.
I mean, what else is
when
it?
It fits.
I absolutely love it, and they're one of those ones that comes if you haven't gone to Five Guys. They come in a paper cup. And they're always overflowing out of the cup into the bag and soaking into the bag. Oh my gosh!
Oh, you paint a pretty picture.
Oh
yeah.
my gosh!
You gotta chill out now. I'm hungry all over again.
I am. I mean, I can dive into that with reckless abandon. So, Five Guys French fries as well. Again, not a recommendation to go to Five Guys. I go to Five Guys, but boy, are they good in my opinion. All right, fourth quarter here. We're talking about where the markets are. I promised you we'd get into it here, and I would be remiss. And as I mentioned during Good Morning Elcan, which, by the way, if you haven't taken a listen to Good Morning Elcan, Monday to Friday, 7 to 9 here. We got Mamie, who started with us at the first part of this year, coming in with producer Bill and Justin. Great addition to the show. Listen to that Monday to Friday, 7 to 9. Good Morning Elcan, all things local. Great show, and they allowed me to chat with them a little bit here this morning, and we were talking about a number of different things. But among the things that we talked about was the Bitcoin ETFs. Now, I don't usually talk about Bitcoin primarily because up until, I guess I should say today, tomorrow, that it hasn't been a securitized asset. I'm not going to get into the nuances of securitized assets. Basically, think about them as something that trades on an exchange, a publicly traded exchange. And so I haven't talked about that because from a licensing standpoint, I can't whenever it is not traded on an exchange in terms of recommendation or for buy, sell, or hold. But now that there's going to be, as approved by the SEC, the Securities and Exchange Commission, ETFs, exchange traded funds, which trade on the spot price of Bitcoin. What that means is basically the point price or the price in the moment of Bitcoin. I have to mention that, and that's going. And again, not a recommendation to buy, sell, or hold Bitcoin. But it's something to keep in mind. Right now, I believe the approval process includes upwards of 11 different ETFs. Very interesting, meaning covering different coins as well. So it's going to be very interesting. It's going to be very interesting to see what the volume intensity is, because often, and this isn't just true for Bitcoin, I'm talking about pretty much everything, that there is a significant amount of buying and selling intensity up front with something new. And that tends to level off. Now, it levels off in different places for different things. Sometimes it levels off very high. Sometimes it levels off very low in terms of volume intensity. It's going to be very interesting to see among these 11, I believe it's 11, that have been approved by the SEC for trading on public exchanges. It's going to be very interesting to see which ones have the highest of volume intensity. I mean, and I say that not because I think that others are good, some are good and some are bad. Frankly, I don't know yet. But it's going to be very interesting to see not just what the upfront intensity is, but what that intensity is going to be over time. And there was actually some speculation, actually from Grayscale, one of the entities in the mix. And I have to mention a couple of others as well, so you don't think I'm recommending Grayscale. Fidelity has one out there. Invesco has one out there. There are several others as well. That VanEck, I know, has one that's out there. So there are a whole collection of entities that have some out there. But there was some speculation there may be some consolidation, that we're starting out with 11 and we may get to fewer because of a need to provide maximum liquidity among the trading entities, meaning that you want to make sure that there's enough liquidity so that you can buy and sell as you desire. With thinly traded kinds of things or things that don't trade as much, sometimes it's hard to buy and to sell. Usually it's not all that hard to buy, frankly, but it's a lot harder to sell. So just interesting speculation, and it is speculation at this point. We don't know until we get into it, but definitely do need to mention it. Again, not a recommendation to buy, sell, or hold anything that has to do with Bitcoin ETF, but very interesting to see it. And so certainly we're going to be watching that kind of thing. All right, market-wise, where are we right now? Interesting start to the year. I mean, pretty expected in terms of weakness coming into the first week of the year. Then we kind of turned around a little bit, and certainly in the technology markets. And I'll raise my hand quickly if you're watching us on the socials here. Surprising. Very surprising, especially in the more aggressive end of the technology market. Some things really continuing to do well. Very surprising to me because we had such a good year last year. Now it's early. It's very early. We say that about the Carolina Panthers all the time. It's early. Don't get carried away with things. I'm going to say the same thing about the markets as well. Don't get carried away on where things are. We've still got a lot of road to run here. I'm just going to keep using metaphors for the balance of this. No, I'm not going to do that for the balance of this segment. We do. We got a lot of space ahead of us. A lot of road to travel to see what actually the market flavor is going to be of this year. So I don't want to extrapolate too much based upon just a couple of days of trading on a relative basis, but it has been interesting to see that. So what do we see going forward? I think I mentioned to you in the previous segment, I'll say it again, with regards to the Federal Reserve, because so much moves based upon interest rates. Whether you know it or not, it really does. I don't anticipate at this point that the Federal Reserve is going to cut rates before the halfway point of the year. I just don't. And I say that not because that's particularly scientific, but I am using historical data to look at that. Just to get to the 6 to 9 month mark, roughly speaking, beyond the last raise, meaning the last time that they raised rates, would get us to the halfway point of this year. And when you're looking at an economy of our size, when you're looking at the size and breadth of our economy, it takes at least 6 months. We're probably closer to 12 months at this point because of the size of our economy. At least 6 months, though, for us to have any kind of even remotely complete picture about what the raising cycle actually means. I don't think we have it yet. I think we're just beginning to see the front ends of it. I think that has to do with what we talked about a segment ago with regards, or 2 segments ago, with regards to the real estate market. I think we're just beginning to see what that means there. Does that mean I think the real estate market's going to crash? No. Don't go out there saying Joshua's saying that's good. No, it's not what I'm saying at all. Because we still have, especially on the residential side, we still have ridiculously low inventories. So that has produced some pricing strength, even as the buying intensity has slowed, meaning the number of transactions have slowed. But because there's such a low inventory, we haven't seen a real big pullback in terms of pricing. So again, a number of variables, both in going in both directions, if we're going to think in very binary ways, which of course it never is, but in terms of understanding and conversationally, we got variables pushing in both directions. So we're not going to be able to understand for at least another several months with any kind of relative completeness. You never understand it completely, but even in terms of relative completeness, what that's going to mean for the consumer. And you hear me talk about the consumer all the time. Very, very important what the consumer is doing, where the consumer is spending. Does the consumer feel confident in terms of how they're spending? Is the consumer more reserved in his or her spending? Because that's 2/3, 3/4 of our economy. We are a consumer-based economy, and so it's very, very important. So we're watching that very intently here. Where are they at this point? Got some conflicting data. Frankly, I don't think that the full effects of the raising cycle have been felt yet. And you add into that some other, let's call them headwinds, certainly with regards to federal student loan payments coming back online, whether we're talking about the mortgage rate increases, auto loan increases. Does that cool those markets? We're starting to see those kinds of things. I'm watching travel because I'm watching the more discretionary end of things because that's where you tend to see the harbingers, or where you begin to see the beginnings of the movements in one direction or another, meaning that if folks feel very confident, the more discretionary ends of the economy tend to be the ones that move first. And they also tend to be the ones that move first whenever folks are pulling back. So I'm watching travel, I'm watching investment property, I'm watching homes in the mountains, homes at the beach kind of thing, where folks have maybe a second or third home. Where is the pricing there? Because that tends to be impacted first before, say, primary residences or primary automobile kind of things. So we're watching that very closely in terms of understanding where the consumer is, but that's what's on my radar screen here at North Main Financial as we're looking at what may come next. So when we're looking at that market-wise, then we're looking at what may come, again, yet ahead of us here. I think it's important to be reserved, especially if you had some big winners. You heard me talk about this last week. I'm going to say it again. Very, very important, because the market, and that means investors, think in straight lines. We do. Every cycle. It's amazing. It's an amazing phenomenon. I've been doing this 28, coming into 29 years. Bless. I'm only 34 years old. I don't know how that works. I'm not 34 years old. Quite a bit older than that. But anyhow, 28 coming into 29 years in this business. And we do. We the investing public, think the same way in every cycle. It's amazing. We do the same things over and over and over again. And coming out of a hot year in the more aggressive or technology end of the markets, there is extrapolation. You can see it in the buying intensity. I mean, it's not me just postulating about what investors are doing. We actually see it in where the volumes are. We actually see it in terms of the speed of transactions or the buying intensity of certain entities. And it's still in the technology, and the big cap technology end of things. That's where we're seeing the intensity. We're not seeing it in the more, let's call it, value-oriented ends of things. We've seen a little bit of flutter up here to start the year. So some things like pharmaceuticals, oil and energy, financials, we are starting to see some more buying intensity there, but definitely in the more aggressive end of things. It hasn't given up at this point, and it's been very interesting to see. So we're going to watch that closely, because it's usually in those kinds of spaces where folks get comfortable where the market is prone to a pullback. And I'm not saying that's going to happen. I'm saying it's a possibility. And that's where you want to be prudent. That's where you don't want to think in straight lines when you're looking at your portfolio. All right, friends, let's do a real quick recap here as we get to the end of this week's version of Dollars and Cents. Talked about where we were as far as the overall, or where we're seeing certain companies make certain moves. You know, we got Boeing out there. We've got office space out there. We're going to be watching it. Real estate. It's going to be interesting to see how this really makes an impact in our economy. And then with regards to the overall markets and looking at where the consumer is, what the market pivots may be here during the year, and to make sure that you're positioned accordingly. Well, friends, thank you so much for hanging with us here on Dollars and Cents here on WSIC.
The new 105.9, 100.7 WSIC, Statesville, W290DK, Mooresville, Lake Norman, North